Given the volatility we witnessed in the debt market coupled with the likelihood of corporate defaults, do you recommend that investors re-evaluate the credit risk that they carry in their funds?
Of course, this is the most important thing which otherwise should investor consider because credit risk don't show up every day, and once in a while over many years it will visit you. So mutual funds are extremely transparent. They have to disclose the rating profile of the debt papers that they're buying. And unfortunately, we don't have a very active debt market, and more so for the corporate debt. So when a fund actually gets stuck, they have to just bear it. And many a times, the fund companies are not even able to pass on it to the investor. So investors should certainly look at the credit risk. But I would say that generally speaking, Indian debt funds have been extremely conservative. They have not been assuming great credit risk. In fact, they normally reconcile with lower return than assuming credit risk. There are very few funds which assume credit risk of some scale, and that also has proven to be a fairly thoughtful assumption of credit risk. So I would say that investors should not worry much about the credit risk today, given the approach of fund managers. But yes, if you spot a fund which has huge lower rated securities, maybe it may not be worthwhile today at this point of our economic cycle.
Our viewer query today is from Jitin Sanglani. He is a regular follower of our program. He has invested a sizable amount in Reliance floating fund, which is of course a growth fund. 6 months back, he wants to reallocate his fund to a debt fund and his time horizon is not more than 3 to 6 months. Dhirendra, can you suggest some good names to him?
Given your time frame and your requirement, it will be worthwhile to you would have experienced this the volatility in this fund, and this fund is likely to remain a little more volatile than an ultra short-term bond fund or a liquid fund. So, and this portfolio is still carrying the fund which you are invested in, the Reliance regular savings, Reliance floating rate fund. Short term is still carrying a portfolio of about 1 year maturity. So it has been a little turbulent, but it has not been as disappointing. I would say move your money into an ultra short term bond fund, and it should be an open-end vehicle given your need that you might require your money anytime.